Hello and welcome to Weekend Investing Daily Bytes. We're shooting episode 258. Uh, will IT stocks recover? That is the sort of common question today, with a lot of IT stocks falling and IT stocks having had quite a dramatic beating in the last many days and many weeks. So we'll take a look at some IT charts and see what we can derive out of those. But first, a look at the market today. So markets in fine fettle, minus the IT stocks that dropped 3% today and some infra stocks that were down. Pretty much the market recovered after the gap down this morning. Uh, Energy stocks, metals, autos, banking, all were doing quite well. As you can see in the chart here, on a weekly basis, almost all sectors have posted good gains except IT sector. And on the monthly basis also, many sectors are now looking good in terms of recoveries from the falls. Although for the financial year and for the last 3 months, we are still having a lot of red on the screen. But nevertheless, minus the IT, pretty much the rest of the market looked quite good. And you can see in the internals of the market, Nifty Next 50 up 1.5%, small cap 250 up 1%, mid cap and small cap index up 1%, CNX 500 up 0.5%, CNX 200 also 0.34%, and Nifty was flat at minus 0.03%. Within the weekend investing small cases, pretty good day. NNF 10 racing up 3% today, EverGreen up 1.74%, ATH2 also 1.64%, and many others above 1% and between 0.5% and 1% on other strategies with high cash. So all in all, a good day from a perspective of all the strategies. The heat map for the day, you can see very clearly where the pain was. TCS down nearly 5%, Infosys down nearly 3%, HCL Tech 4%, Wipro down 2%, Tech Mahindra down 2%, and Bharti Airtel down almost 5% here. Apart from that, you can see that most consumption and FMCG stocks were muted. Steel came back, Tata Steel up 3%, and crude oil also coming back, ONGC plus 3%, JSW 1.96% on government reconsidering the duty on exports. And banking also is sort of limping back with HDFC, ICICI Bank, Kotak Bank and Axis Bank sort of either flat or slightly above. So all in all, a reasonably good day, I would think, minus the IT stocks. Top gainers for the day, Adani Green blasting away plus 15%. So just see what is happening. For the last 2 years, so many, naysayers that, this group stocks cannot do well, have maybe avoided these stocks or, not considered them in their portfolio. But look at the kind of wealth it has helped create. What will happen tomorrow is anybody's guess. But right now, if you have been able to ride the waves, and there have been many waves, not just one, it would have definitely added a lot of alpha to your portfolio. Anyhow, so Adani Greens up 15%, VMart Retail up 11%, PCBL up 9%, Sudarshan Chemical and Blue Star up also nearly 8%. And the biggest losers today in top 500 stocks were Bharti Airtel, TCS, HCL Tech, Persistent and Nazara. So pretty much tech slash telecom slash IPO, new IPO based sort of stocks, all technology oriented stocks that have fallen. So coming to the topic, IT index. So let's look at this CNX IT index, and I'm seeing the last about 8 years here. You can see that the initial years here from 2015 to 2018 were kind of flat, and then there was a move up of about 30-40% here from 17 to 19. Then we went flat again, and then there was this COVID crash that happened, which kind of pushed the world into if a situation where the IT industry and the requirement for services in that industry kind of went exponential, and the Nasdaq went exponential, and the IT index for India also went exponential. And now after this humongous run up, I mean, just look at the run up, it went from 11,300 to nearly 40,000. So almost 3.5, 4 times this index has jumped, and it has seen a correction of now nearly 33%. So if a fantastic jump, but a fair correction post that, I would say. And given that this latter part of the correction would have had a lot of stocks go into the stratosphere with crazy kind of valuations, etc. So it's all that froth is correcting along with Nasdaq coming down. So this is not unexpected after a 4x rise, let's put it this way. So nothing really has gone bad as such. It's just that we will need to go through some time correction and possibly some more price correction before some newer base is formed. Until that, of course, a painful period will continue. So right now, as the chart shows, there is no sort of hurry to go back up. It doesn't seem like that as of now. This is the Nifty versus CNX IT versus Nasdaq since the beginning of the year. So about 7 months of chart here, and you can see that while Nifty has remained largely still, I would say, lesser hit, Nasdaq got hit 22-23% from the beginning of the year, and CNX IT has been hit almost 29%. Also because rupee dollar is also is coming off by quite a bit, so some impact of that also can be seen here. But nonetheless, we are pretty much in line with Nasdaq. So until Nasdaq starts to recover, I don't think CNX IT is going to have a party of its own. This is a top CNX IT stocks chart of the current year to date changes. So again, comparing it with Nifty, the CNX IT is sitting here at minus 30. Some stocks have done better than CNX IT. So TCS is down only 21% this year. Infosys is down 23%. HCL Tech is down 29%. Whereas some underperformers of the CNX IT are Wipro at minus 36, Mindtree at minus 38, Tech Mahindra and Larsen Tech Infotech, Larsen Tubro Infotech at minus 44% also. So some of the mid-cap stocks in the IT have really gone for a toss in the last 6-7 months, but larger stocks have still, after a huge run-up in the last 2 years, have still, done a reasonable correction. So nothing seems to be out of the blue in terms of having a reasonable correction after a massive run-up that these stocks have seen. So this is essentially sort of, while nobody can say how much more further these stocks will go down, but my sense is that as soon as Nasdaq starts to bottom or create some sideways movement, at least we should stop falling on the Indian IT stocks, and that point may not be too far off, if not already. So while it's nobody's guess how and when the markets will bottom in any particular sector, but this does give a very good indication for watching Nasdaq to figure out where the Indian stocks will stop. So wait for the stocks to fall, wait for some formation, and then once the stocks have consolidated and then breaking upwards, that is the point where you should consider buying and not catching the falling knife as they're coming down. Leave the first 10% if you have to, if you have to make a guess where to buy, you can just leave even if the stock goes up 10-20%. But if you are more sure that the formation is right, the stock has bottomed, it has consolidated, and now the new leg is going up, it is always better to buy at that time than to try and catch the falling knife. So this is all I had for today's episode. Thank you so much for watching. Please do share this video, and if you have liked it, please do press the like button as well. Thank you. Bye.